Our last lecture, we gave an introduction to the cash book, where we look at the meaning of cash book. We also look at the types of cash book, the single column or one column, the two column or double column, the three column or triple column cash book. And we'll also move further to look at some working examples, transactions of two column cash book. And today we're going to look at the three column cash book. So in three column cash book, all the entries remain the same with that of the two column and the three column. But the difference is an addition of a column, and that column is the discount column. So you will have your normal column for the two column cash book as cash, bank. This is the two column cash book, 1, 2. So for the three column cash book, the addition of discount, then cash, this cash, and bank. So it makes it three column cash book. That is the only difference. But the entries to the cash book still remain the same. That is, the transactions to be entered in the three column cash book is the same. If it is a debit transaction, you debit your cash or bank. The same thing to the three column cash book, you debit your cash or bank. So there is no difference. The difference is the discount column. So now this discount comes in two forms. We have discount received and discount allowed. And this discount allowed or received normally makes students confused. That is, students normally get confused on how to kind of put the discounts. The discount received, is it going to be at the debit side or credit side? It makes students confused. Why? Because the name allowed, students feel since it is allowed, it's like a form of going out. And if something is going out, it is credit, which is not like that. If you credit this, you're wrong. And discount received. Since whatever you received, you debit. Students look at this received and feel it should be at the debit side, and it is wrong. So if you bring this discount receipt and put it at the debit side of the cash book, you are wrong. So I will tell you why discount allowed should be at the debit side, and discount received, despite the name is here, received, will be at the credit side. Now listen, pay attention. This is, we are here, it is owners. We are the owner. Please pay attention. Listen. This point, we are here, that is, we are the one preparing this cash book. So we are at this point, the owner point. So we have suppliers here. And we have customers. So it's very simple. Now, the supplier will receive goods, from the supplier. When we receive goods from the suppliers, then we sell these goods to our customers. Simple as that. So looking at this chart, the supplier supply all the goods and we sell to our customers. So now, when we sell to our customers, we receive cash or check. So whenever we receive cash or check, we are to debit that cash or check. So automatically here is a debit transaction, debit entry. since we sell to the customer and we receive cash or check. So when we sell, we receive, that one is cleared. But what is confusing is the discount. We are in the possession of these goods. We own these goods, so we have the right upon these goods. We can do and undo with these goods. If we like, we sell it to our customers without discounting. If we like, we sell it to them with discount. So if we want to, we decide to sell it to them with discount. So we are the one, the owner, we allow our customer to pay with discount. So since we are allowing our customer to pay us with discount, that is where we discount allowed. So this is telling us that we allow this customer to pay us the amount of money with discount. So automatically it's going to be at the debit side. Why? Because we supposed to receive $10,000 from this customer. An example. We're supposed to receive $10,000 from this customer, but we say no, we are allowing you to pay us, we're allowing you $2,000 discount to pay us $8,000. So we will receive $8,000 and allowing that customer $2,000. So you cannot separate the discount allowed from the debit side of the cash book, because the narration, the analysis as an accountant, if you see an entry like this, you know that 8,000 is what we received, and we have allowed $2,000 as discount to our customer, but in all, we're supposed to receive 10,000. 8,000 plus 2,000, that is $10,000. Simple as that. So we'll come to the supplier side. When we buy goods from the supplier, we pay the supplier, and that is credit transaction. We will pay the supplier to receive the goods. And these suppliers are the owner of the goods before we pay. They have the right, just the same thing with this, to a kind of sell to us with a discount. If there is discount, who is receiving that discount? We are the one, the owner, receiving the discount. So automatically, discount received is at the credit, is attached to the credit side of the cash book. Because when we pay, we receive discount. That is simple about discount allowed and discount received. When we receive, we allow that person, the customer, a discount of what he is paying. When we are paying the suppliers allow us, that is, they give us a discount, which we are to receive it, because the preparation of this cash book is at the angle of the owner. So we will receive discount. So if an accountant sees something like this, he knows that we received discount of $2,000, an example, and we pay $6,000. This is telling us that what we're supposed to pay in all is $8,000, but we have received a discount for the payment of $6,000. So since we have received $2,000 of $8,000, we have to pay $6,000. So this is all about discount received and discount allowed. So in solving these questions, entering the transactions, when we reach a transaction that have discount allowed or received, we will get to know it better. So let's continue. Let's proceed. This is Jerimot Limited transactions for the month of July 20SS. So these are the transactions. And this is the heading, the 3-column cash book of Jerimod Limited for the month of July 2018. So we want to prepare the 3-column cash book now. You divide, this is the center line. So you double it for us to know is our center line. Okay. As usual, we have, if you go to my last lecture, you will see how we did it. We said there are constant columns, like the dates, column for dates, column for particulars, they are constant. Ledger folio, these are constant column. Then column for discount, the addition that make it 3-column cash book, column for cash, and column for bank. Simple as that. Now let's see. This is debt. Debt. This is particulars. Particulars. This is ledger folio. This is the discount. Discount. And it is discount received from our explanation. Discount received. This is cash. And this is bank. So we have 3 columns, starting from a discount. 1, 2, 3. So you rule it. Rule it. This is our currency sign, dollar. Our currency sign, dollar. And our currency sign, dollar. So we come to the debit side. This is credit side of the cash book. And this is the debit side of the cash book. So we come to the debit side. We have debt. We have particulars. We have ledger folio. We have discount, cash, and bank. So you rule it. We have debt, particulars, ledger folio, discount, allowed. We have the cash and bank. This is your heading. Then your currency sign, dollar, dollar, and dollar. This is the format of 3-column cash book. So let's look at our entries, our transactions. So let's look at our transactions. We say this is 1st of July. Started business. So started. This is a new business. We started business by depositing $50,000 to the bank account. The bank account is receiving. So this is a debit transaction. This is a debit transaction because the bank is receiving. The bank, you go to the bank side of the cash book. At the debit side, the bank is receiving $50,000 as a result of what? Starting the business. So you are investing, and we say investment is capital. So the bank receives $50,000 as a result of investment, the particulars, that is capital. Capital on the 1st of July. Very simple. We receive $50,000 from capital on the 1st of July. You are done with the transaction. We go to the next transaction. On the 3rd of July, we took $30,000 cash from the bank for business use. Go back to my last video where I've explained transactions like this. These are contra transactions. These are contra transactions. That is, the cash is moving from bank, not because of buying, but it's coming to the same business. So these types of transactions are called contra transactions, and the entries are contra entries because it will affect the both sides of the cash book. Let's see. We took $30,000 cash. So cash is coming. We are taking cash from the bank. So cash is coming. Must be at the debit side. The cash is coming, and the cash is $30,000. You put your $30,000. Okay. Then from bank, we got this cash from bank on the 3rd of July. Very simple. Now, since it is a contra transaction, you contra entry it. Very simple. So you go to the other side of the account because it is from your bank account that we took the cash to our cash account. So now, on the 3rd of July, cash moved from our bank account. So the bank account is reducing because we are taking $30,000. We are taking $30,000 from our bank to convert it to cash. Then you contra entry. Very simple as that. Then the next transaction is receive cash from one Gerard P. Fee, $20,000, PWC, $10,000, Omoeke, $5,000, all with 10% discount. So please listen. This is the discount that I've explained in the introduction part of this lecture. So now, listen, we receive. So automatically, this is a debit transaction. This is a debit transaction because we received cash from these customers we are receiving. So it's a debit transaction. So now let's look at the discount part of it. So we are receiving 20, that is, we're supposed to receive $20,000 from this customer, Gerard P. Fee, but we are not receiving this 20,000 full because we are discounting 10% from what this customer is to pay us. So since it is like that, we come to our debit side, knowing that this is a debit transaction. You say on the 4th of July, now we are discounting, we are giving 10% discount of 20,000, and 10% discount of 20,000 is $2,000. So we are discounting at our discount because we are allowing them to pay us like that. That is why it is discount allowed of $2,000. So we allowed Mr. or customer Gerard P. Fee, we allowed him $2,000 from the $20,000 that he's supposed to pay us. So now he will be paying us $18,000. But don't forget, it is in check. So you go to your bank column. So we are receiving a check of $18,000 since we have allowed him $2,000. Simple as that. And that is how we are going to do it for the next customer and to the end. Now, PwC. Is PwC supposed to pay us $10,000? But we are discounting 10%. We are allowing him a discount of 10%. And 10% discount of 10,000 is 1,000. So our discount 1,000. So we allowed 1,000 discount. We allowed PwC 1,000 discount of what he's supposed to pay us, the 10,000. So he is now paying us $9,000 check. Very simple as that. Then the third customer, Omoeke, $5,000. We're supposed to receive $5,000, but we are allowing this customer, Omoeke, 10% discount. So if you calculate 10% discount of 5,000 is 500. So the discount is 500. We allowed Omoeke 500 discount, and she's now paying us 4,500. Simple. This is how to treat your discount, and the same to the discount receipt. Let's see. On the 8th July, paid by check. Automatically, this is credit transaction because we are pay by check and deducting 20% discount. ICANN $10,000 and ANAN $8,000. So we are not paying ICANN this $10,000, complete $10,000. We are going to deduct 20% of this 10,000 and pay him the remaining amount after deducting the 20%. So we are receiving 20% discount from ICANN and 20% discount from ANAN. So, and that is why discount received is always at the credit side. When we pay, we receive discount. On the 8th day of July, we received 20% of 10 is 2,000. We received $2,000 as discount, and we're supposed to pay 10,000. So now we are paying 10,000 minus this discount. We are paying $8,000, but it is by check. So it is at your bank column. So we are paying $8,000. Simple as that. The second is ANAN. ANAN, on that same day, ICANN. On that same day, we're supposed to pay ANAN $8,000, but we are receiving 20% discount from this $8,000. So our discount is $1,006, and we'll be paying $6,400. Simple as that to ANAN. That is simple. That is all about the discount, allowed or received. The next transaction paid Mr. Aka $10,000 cash less $2,000 discount. So discount is in two forms. Either it will come in percentages or it will come direct, just as in this transaction. It is not in the percentage, but it is in direct. So you apply it direct. You will say we are paying, so it's credit, this is credit transaction. So on the 10th of July, we're supposed to pay $10,000, but we are receiving $2,000 as discount. And now we are paying $8,000, and it is cash. So you go to your cash column, we are paying $8,000. cash. So this is how to enter your transactions in the cash book, especially the discount part of the transaction. And this is all about entries in the cash book. Now, you must balance your cash book for you to know the amount that will be left with you to continue your usual transaction in the next coming month, which is August 20SS. Because this is July 20SS. We will close up our entries in the July and start another in the next month afresh, using the balances that will be left with us. So for you to get this balance, for you to get them to balance your account, you compare the credit side of your account and the debit side of the account and the credit side of the account. So now let's do it. This is but don't forget, we don't balance discount. If you add your discount, you write it in full. Whatever you get, you don't compare. So it is only the cash, just as we did in our last video, the two column cash book, cash and bank. Cash and bank. So let's look at it. In the cash column, at the debit side, we have $30,000. And the credit side, we have $8,000. We have $8,000. So for you to make it the same, this 8,000, to make it the same, if you add it to give you 30,000, you look for the difference. And the difference is $22,000. So this $22,000, it is the balancing amount. And if you put it here at this column, the cash column, it will give you the same $30,000 at the end of the month, which is 31st of July. Our balance carried down, it is called balance carried down. Balance carried down. Go to your cash column, $22,000. $22,000. So you compare your bank and the bank of the credit side, bank of the debit side, and bank of the credit side. Now let's look at it. We have $50,000. We have $18,000. That is $68,000. So this will give you $77,000, and this will give you $81,500. $81,500. $81,500. If you add it all, 50, 68, 77, and $81,500. Now you come to your bank column at the credit side, you add it. This is 30, this is 38, this is 44,400. 44,400. Then you look for the difference to balance it up. 5 minus 1, 1. This is 7 and 3. 37,100 is our balancing amount. And in accounting, it is called balance carried down. So $37,100. $37,100 is our balance carried down for the bank column. So now we add it. We add it all. Add it all. This is, it will give you $81,500. Here is your $30,000. And if you add this, it will give you $5,600. $5,600. $5,600. And it will give you the same. This is $3,005. $500. You don't balance the discount side of the account. This is $30,000, and this is $81,500. So you close the account. We are done. You close the account. So now, the next month, the balance carried down will be balance brought down next month. That is on the 1st of August, 20XX, our balance brought down will be, for cash is $22,000, and for bank $37,100. So this is the amount, the balances that we have to continue our usual transaction in the next coming month, which is August 20XX. So this is a new business, but in the next month, August, you will see your transaction as 1st of August balances. For cash, $22,000. For bank, $37,100. So thank you. Please, if you're happy and you're enjoying what we're doing, please subscribe to our channel, the Icon Success Academy, and don't forget to click on the notification bell icon and click on all, so that whenever we release our videos, it will come to you. Thank you so much.